So thank you all for your time today. I think we're close enough to noon to get going. What we're going to do to begin is have a look at the completely revised real-time mode. You've got the latest version of the software recently, so you may have had a chance to have a look at it. And then after we go through it, what we'll do is,
thank you.
Sorry, we've got people that are unmuting themselves, I think. After we've gone through the real-time mode, what we'll do is we'll have a look at the whole life planning approach and the whole life planning interface. So I'm going to use our sample file today. And you can see that what we need to do is just go to presentations and then run real-time mode, and it will open it up. And I'm going to expand this to full screen. So I just want to orient you to some of the features to begin. You'll notice down the left the navigation pane, for instance. So right now we're on the home page. There's also compare, net worth, income, assets, and so on. Across the top, we have the different tabs, Bill, Sue, Total, Bill Jr. So right now we're showing output that's total. You can also see the ability, by the way, to create new solutions on the fly. So if you're working with a client and the client says, what would happen if we did this or that, then you can just go to the home page in real time, create a new solution, and make whatever changes you want. We decided to add this retirement spending target to the top, and basically what it does is it looks at all retirement income sources through the client's life, all retirement uses, and then gives you any surplus or shortfall. And of course, right now, we're looking at something which is essentially 100% funded. You will notice that there is excess. So it's over and above what's necessary for the retirement funding. It then becomes what's available for the estate. So this is just to ensure that there are sufficient sources and uses sufficient sources to meet the client's desired uses through their life expectancy. And then, of course, we can see the basic output that we always look at: net worth, income, assets, annual net cash flow. And then finally, down at the bottom, we can see the estate output, Bill's estate and Sue's estate. So what I want to do is just go down through the navigation pane and get you oriented to some things. On the Compare tab, because we have bigger screen size, we've actually been able to create the ability to compare 4 solutions at once. So I have a number in here. I'm just going to randomly pick some and then click the Apply button. And what we'll end up doing is building the output for all 4 solutions. I also want you to notice that they all use the same scale. So you can see it's roughly $6 million at the top. So we can see the relative performance of the different solutions. And of course, you can switch between net worth, income, assets, and net cash flow, for the different solutions. If we go down to net worth, you can see then on the left the 3 critical output series that we look at: net worth, income, assets, annual net cash flow, and also Bill's estate and Sue's estate output. Across the bottom, you can look at the output, for example, home values. We could go out and select 2030 and look at the projected home values in 2030. So I'll go back now to today's values. I also want you to notice the various icons across the top. So right now we're looking at the chart output. We could switch to pure table if we wanted to see the numbers more clearly that way. And we can also switch to a combination chart and table output. And then we could also look at any of the output over time. So if I've got homes selected, for instance, I can just click on the over time value and we can see the value of the homes over time. We also have the ability to drill in and look at the tree view with the different buttons. So again, if I wanted to, I could, for example, go into 6R Street, perhaps change the appreciation rate that's being used. I'll just make this very simple. Click the Save button, close, and then what we'll get is updated output, and then you can see the impact that that has on net worth. Notice that the income assets are unchanged because home values aren't part of the income assets, but the net worth certainly changed. And it's a rollover, so the solid purple shows you the after, and then the hash marks show you the before. So you can see the decline of almost $2 million in the net worth just because of our change to the appreciation rate. There's also a find feature, so you can go in and type in anything you want to look at, any particular asset, for instance, and it'll help you find it. We'll look at that a little later when we look at net cash flow. And then we have the ability to switch back to, some other output. So we can either click the back button or, in this case, just click the chart button. So you can see that net worth has assets and any liabilities on the right. If we go down to income assets, then we have the output for non-registered portfolios, pension plans, etc. So for instance, I might want to go in and just type in RRSP, and then that would, show me Bill's RRSP, for example, and the overtime button. Otherwise, I could drill into pension plans, go to Bill's RSP, for instance, and if I wanted to, I could, for instance, change contribution amounts, or in this particular case, I might even want to go in and change the rate of return being earned, so I could go to current holdings to do that. There are tactics, by the way, so we could go to the Tactics tab and change the rate of return if we wanted to, but again, just as a for instance, I'll click the SMA tab and select one of the 4 strong portfolios, so I'll select Global Income, click Save, and then click the Close button and recalculate the output and see the impact. And we can see here that the impact on Bill's income assets is quite substantial with that higher rate of return. Let's go to cash flow. So the whole point when we present the output to clients, net worth, income assets, annual net cash flow, is they're seeing the overview for the first time. And the idea of real time and the ability to work interactively with people is that it can be a tremendous time saver for us, but it also gets the client much more engaged in creating their own plan and therefore taking ownership of their plan. So typically what happens if we put all the pieces of the puzzle together, and we'll talk more about that later, and then meet with clients and show them the output for the first time, naturally they're going to have questions. And rather than us making note of those, going back, re-crunching the numbers, re-meeting with the client and so on, what we want to be able to do is make changes on the spot with the client, see the impact, and they will literally internalize much of what they learn. And that's then going to save us time because we're doing the changes interactively. We don't have to meet, change inputs, re-meet, change inputs, re-meet. But also, and Paul talked about this last week, Paul Armson, when we work interactively with clients, it really reduces our reliance on the need to put together a lengthy report as the learning document or the learning medium because clients learn interactively. So in this case, we've got a very good looking income assets graph. So the clients might say, for example, well, we talked about our vacations. So you can see as I drill down, I can now get to that vacations panel. We talked about what we spend currently on vacations. We're working, we have a limited amount of time. And then our hope, once we were retired, was to double that. But given the output that we see, what would happen if instead of making it $10,000, we actually made it $20,000 a year? And what would happen if we stretch that out even 5 more years so that we're doing $20,000 a year for 15 years? So we can make whatever changes we want, click the Save button. When we close, everything will recalculate, and then we can see the before and after. So our $1 million projection is now down to $360,000. So at that point, again, the client might say, well, you know, what happens if we just drop that back maybe to 15,000? Maybe there are some other things we might want to do. So we're able to do this very smoothly with clients and help them really, you know, grasp what the implications are for their different options. If we go to tactics, you'll see standard tactics, and again, they're going to depend on whether you're on Bills, Sue, or on the Total tab. So I'm just going to go to Bills tab, and in our files, generally speaking, what you'll see is that Bill and Sue have much the same incomes and asset values and so on. So if I click Optimize for taxes, we may not get a big change. I often tell the story about the client that called in December and asked about this whole optimize feature, because when he ran it, what actually happened was it improved the client's position by $500,000. And the story was simply that it was a man retiring from the federal government, $108,000 a year of index-defined benefit plan income. By optimizing and splitting the pension income at reduced taxes, because there were now two $54,000 income streams from those sources. But more importantly, over roughly the 35 years of retirement to life expectancy, what it did was it eliminated largely the OAS clawback, which then meant an extra several $1,000s a year over 35 years. So, and then that in turn meant more income, less reliance on the capital that they'd accumulated, allowing it to then compound in TFSAs, RSPs, so that the whole picture ended up being a $500,000 advantage. Here we can see that taxes saved are $15,000. There's also going to be a reduction of the OAS clawback for a net impact of those two of $24,000, but also because money is being retained and compounding over time, then the total plan difference actually adds up to $47,500. So obviously something that we want to include. Now you'll notice when you're on tactics that you have to look for the apply button so that the various tactics can be applied. And then finally we can go to the estate, and this gives us the ability then to do any estate output. So right now, as I typically do, I have a second marriage situation. Bill is leaving the cottage to Sue, but we could investigate the case of what happens if I end up leaving the cottage to Bill Jr. So right now we can see everything that Sue's going to get. The whole picture, of course, looks quite good. But what we're able to do is click on this and say, well, what would happen if we left the cottage to Bill Jr.? I need to leave my son something. And so when we click the Save button, and I'll just hide the beneficiaries, what we see is the negative residue for distribution, which was minor, is now very substantial, and a lot more money is going to the government. And again, we can compare any two solutions side by side. So I'm just going to go back and change that back to Sue, and then you can see the difference again. So we'll save that, and you can see how the amount that's going to the government through capital gains taxes and probate fees is much less. And then the negative residue for distribution isn't nearly as great as it was if the cottage goes to Bill Jr. So pretty much everything that you will want to look at with clients is all accessible. I think to a very great degree you'll be looking at changes to spending, for example, but it's all essentially right here. What I want to do next then is I want to flip over and have a look at the whole life planning approach and how we can then integrate real time into a life planning approach. So one of the things that I thought was really interesting about Paul's presentation last week was that he created three concepts. Life planning, as he expressed it, was about the conversation that he has with clients, not only about the things they want to have and do in life, but also about their story, where they came from, how did they get to where they are today. And I want to talk a little bit more about that. Having that conversation with people, how did you get to where you are today and where do you want to go in the future? That's what he defined as life planning. He then spoke in terms of financial planning, being the number crunching. Great, how are we going to get you from where you are to where you want to be it a combination of your lifestyle choices or, any financial planning tactics. And that's then where real time comes into play, so the clients are involved and are participating in the planning process. And then finally, he talked about, he calls them the three hats. He talked about the third hat, which is the financial advisor type hat, where if products are necessary, be they investments or insurance or whatever, then he addresses those, having fallen out of the first two conversations. So one of the things that I just want to point out, and it's essentially the key difference between how I would approach the concept of financial planning and life planning, is that when we're doing a financial plan, we're really creating it for the client. So as a consequence, whenever we create an entry, what we can also do is go in and quantify that entry. So the idea is, what do you want to have and do? We gather that perhaps through some conversation we have with people, and then what we do is we go and put in all those things that they spoke to us about, and at the same time we quantify them. So we're just working away, we're just trying to get everything entered as efficiently as we possibly can. What I'm going to do now is I'm going to switch to the life planning interface, and you'll see it has a very different approach. And I want to go first to values, because I thought this was a very interesting point that Paul made. What he spoke about was having the focus on the client. And his route to doing that was to ask clients about their story. How did you get from where you are to, or to where you are today? What key decisions have you made in the past, starting a business, whatever it might have been? And then that gets the client talking. We've always taken an approach to accomplish the same thing, putting the focus of attention on the client by running them through the values exercise. But I actually thought Paul's approach of asking clients about their story was very friendly. It's something that people are very aware of. They don't have to put in any thought or effort. It's just something that they can speak about naturally. And then what that does, of course, is it helps open them up. So it puts the focus of attention on them, it opens them up and gets them talking. So I really like that a lot. I thought that was a significant contribution to what we're doing. Also, what I'd like to do is I just want to bring up the relationship equation, which I talk about in my book, and review the concept here. There are the four ingredients: understanding, my advisor understands what's important to me; dependability, my advisor is being reliable, kept promises; expertise, my advisor is obviously knowledgeable and can help me; and then the fourth, which is the divisor, is self-orientation. And it's not the client self-orientation, it's your self-orientation. So let's just assume for a moment that you scored out of a possible 10 on understanding, dependability, and expertise. So that would mean you'd have a score of 30. But if the client said, I really sense that this is all about your agenda, you're simply trying to, get to a point where you can sell me product. So your self-orientation is very high, give it a 10, then we'd have 30 divided by 10, and the relationship score would be 3. On the other hand, if the client's perception is, really, this is all about me, you're trying to help understand me better, help me figure out what I need to do to get from where I am to where I want to be, and so on, and your self-orientation is very low, let's call it 3, then 30 divided by 3 becomes a relationship score of 10. So the key component in all of this, of course, is the client's perception of our self-orientation. And whether we start with the values exercise or Paul's, tell me your story, what we're doing is we're putting the focus of attention on the client, saying, I really want to understand you, what's important to you, how did you get to where you are, and so on. So I just wanted to bring up the relationship equation to remind you of just how critical the client's perception of your self-orientation is. So let's go to vision. The big difference between the life planning approach and the financial planning approach and the life planning approach is that rather than using the question approach, what we're actually going to do is use the software interactively in front of clients to help them create their vision. So it might be something like, we've got a house, so we just drag and drop the house button onto the tree view. And I want you to notice, unlike financial planning, there's no ability here to bring up any kind of panel to put in any numbers. So let's assume, okay, we've got the house. Are there any things that you've been thinking of doing around the house? Well, actually, we've been talking about a kitchen renovation. So we'll just click the kitchen button or the renovation button, type in the kitchen, and then we'll add that as one of the things we want to do. And again, no ability to add numbers. So the concept, of course, is that thinking about the future, our wants, imagining the future, is very much a right brain exercise, whereas numbers are left brain. So if we say to people, what do you want, and when do you want to do it, and what do you think it'll cost, we're going to be constantly switching them back and forth between right brain thinking and left brain thinking. And that back and forth quite literally tires the brain. So all we want to do here is use the visual approach to stimulate the conversation and draw out from clients what they have got in mind. So again, the idea is that we're taking the visual approach to do it. And I want to use vehicles. It's my common example to understand why. Anything that we thought about in the past that we'd like to have and do is stored in our brain as what's called a neural firing pattern. And the neurons where these wants are stored are dormant until they're stimulated. And the reason that they're dormant is very simple. If they weren't, all of our past thoughts would be active in our brain all at once, and it would be total chaos. So one of the issues that I see in having what I'm going to call the script, the booklet of questions where we ask people about different things, is that what we're going to draw out from clients is very much limited to by and large, to the questions that we ask. So the reason I like vehicles is because we wouldn't sit down and say to people, what do you drive now, or what do you want to have in the future, cars, vans, sport utilities, etc. But when we take the visual approach, people's eyes will look over the array of choices very quickly, and then they'll see what they see. Well, we drive SUVs, but one of the things we've talked about is one day we'd like to buy a motorhome and tour North America and down into Mexico and whatever they've got in mind. And it's not the sort of question that would be when you're using a questionnaire where we would be going through all of those different things, but it's something when we take the visual approach that's very easy to do and works very quickly. So I believe that when we want to engage clients in this whole conversation about their wants in life, that taking this visually stimulated approach is the most effective way to go. So once we've gone through and they've talked about the things they want to have and do, then we want to go to financials. So I'm going to switch to Bill. And it's the same basic concept, except here we're not going to talk with people about numbers or anything like that. It's just to run through things and have them identify what they have. Well, I've got a portfolio, I've got a TFSA, you know, whatever it is, or you know, I've got 2 credit cards, or I've got a line of credit at the bank, or whatever it might be. Or if we get down to other assets, you know, I've got an employee share purchase plan at work, which could, by the way, be, you know, quite lucrative. So here we're just going to create the entries without any regard to any kind of conversation. Let's just establish what you've got. When we move on to details, we're going to apply some numbers, but we're going to make a distinction between vision entries and what we call hard data entries, which is why we have this legend down at the bottom. So a vision entry is something like, when do you want to buy the sport utilities, you know, what do you think they're going to cost, and so on. So we want to be able to go down and you know, look at these different entries and talk about things, put in some numbers around them, and so on. The difference then with the hard data entries would be that we're going to add in things like property taxes and operating expenses for homes. So the idea is that we'll quantify the vision entries conversationally with people. The vision entries are merely made up, just what you'd like to do. If we go back to our 6R Street entry and renovate the kitchen, you can see it's got a little blue arrow beside it. It's got a blue diamond, and then when we select it, it turns into a blue arrow, a vision entry. So it just defaulted to 20,000. So people might say, well, it's a project for next winter, so we'll drag it out to 2021, and we want to spend however much they want to spend on it. Now, if it's around 20,000, great, we can just drag the dollar bill bundle, but it might be something like we want to spend $50,000. So, you know, we can open up the table at that point and type in the $50,000. So we want to quantify vision entries with people. They're made up. They just represent people's preferences. So that's very straightforward, whereas the hard data entries are all factual. And you can see that for the house mortgage, earlier I had just made the terms in red. I deselected this edited button. And the reason that I did that is because what we want to be able to do then is provide clients with a questionnaire for any of the information that we're missing. So the way the software works is very simple. Anything that has a color code beside it, be it blue or red, and hopefully we get things just to the point of being red, that will automatically create a question. So we'll end up producing a customized questionnaire for clients. So if I click print questions and print preview, you can see there are a couple of default questions about wills and last year's tax return for Bill and Sue. But now you can see on the joint tab, we've got a question that's specific about terms of their mortgage. The one other thing that I just want to add about all of this is that you can generate a questionnaire, which is kind of the default questionnaire. It's sort of computer generated. It's not very elegant. The alternative is you can click export, click save as, and you can save that questionnaire as what's called an RTF file, rich text format. And an RTF file can then be imported into Word, for example, and you can clean it up, you know, change the font, change the point size, add your logo, delete questions that you think are, you know, unnecessary, etc. So you can end up giving clients a very tight and very good quality questionnaire, and every question on it relates to the client. So now we've had our first meeting. Let's talk about your vision. What are the things you want to have and do in life? Let's quantify that vision. When do you want to do them? What do you think they'll cost? We've identified the financial starting point, and then what we're able to do is generate that questionnaire and perhaps send it off to the client once we've cleaned it up. Their job, of course, is to provide us with that hard data, get it back to us so that we can then get everything entered. And having gotten it all entered, now we're ready for the second meeting, what Paul last week referred to as the financial planning hat. We understand what you want. Now the question is, how are we going to get you from where you are to where you want to be? So what we're able to do then is we're able just to, sorry, I didn't turn off my email. I apologize for that. Then what we're able to do is switch to the real-time mode. We have to go back to the main page to do that, click the real-time button, and now we're back into real-time mode. We've got the financial forecast. We can sit down with clients in the second meeting, go through the output, what does this tell us, and then we can start working with them to either, add some expenses, or if there's a shortfall or things are rather lean, perhaps look at places where some spending could be tightened up. And I'll just remind you that when it comes to the net worth, income, assets, and annual net cash flow output, that the document called the 3 C's and 5 planning themes talks about all planning tactics being one of the 3 C's: convert, create, conserve, or the special form of conserve, reduce taxes. But also what this does is it goes through the 5 main themes: house rich, cash poor, high latte factor, the net cash theme, okay to spend more, dominant amongst people that are retired, their fear of running out of money. And then, of course, for clients that have a lot of wealth, addressing the question, will I be okay in retirement, is not really very earth-shaking for them. They know they're going to be fine, but what we're able to do is uncover the estate issues for them, and that's really the value add. So these 3 graphs, combined with understanding the 5 main themes, will allow you to be able to really focus in and have that conversation with people. And then the last thing I want to do is I just want to remind you that ultimately there is no the plan. A plan, as Paul said last week, and I've always agreed with this, is outdated from the moment it's created. What I believe the ultimate purpose of planning is the ability to master change. So as much as we may talk with clients about the things they want to have and do, whether it's 2 months, 2 years later, at some point their wants are going to change. And it's our job to train them. Don't go out and make a significant decision, a financial decision, hoping that it'll turn out. What we've really done here through the life planning approach is we've really built a lifestyle decision-making model. So before you go and do something, let me know. We'll create a what if, a new solution. We'll model what you're thinking of doing, and we'll see what the financial implications are. And that's going to help you make the most informed possible decisions. So we all have to manage change, but I believe that life planning is not only getting people on the right path, but it's also mastering change throughout their life. And the only way we can really do that is to have a really good quality life type model. So what I want to do is just throw it open to any questions. If you want to use chat, please do, or otherwise what you can do is you can unmute yourself and then speak up and just ask a question. Anybody with any questions that they would like to ask? Here we have one. Can you download the program to more than one computer? Yes. A license covers actually 3 downloads. So typically, let's say your desktop computer at work, your laptop for going out into the field, and also another download so that your assistant can be helping you with files. Really, it's the job of the assistant to load the data in. You want to spend your time meeting with clients, talking with them about the things they want to have and do in life, building those deep relationships, working with them around how are we going to get you from where you are to where you want to be. But I think certainly an assistant should be involved in that middle step between the 2 meetings, the data entry step. How to get into real time? I blinked and missed it. Sure. So there are 2 approaches. So let me just close real time here. When you are in the life planning mode, so let me go to vision, then what you need to do to get to real time is you need to click this button, which opens a menu. That's kind of the standard menu symbol. Go back to the main page and switch to real time. Now, if you're in the financial planning mode, so let's switch to financial planning, then all you need to do is click presentations, run real time mode, and you'll switch to real time. No, we're not going to do, at least at this stage, we're not going to do real time for CorpWorks and TrustWorks. Something that perhaps we might consider now that we've got this technology pulled together. It might be a little more straightforward for us to be able to do that, but there were no particular plans to do that at this stage. The text size larger in real time. I think you'll find that it's a reasonable size if you expand to full screen. I know some of this is a little small. We actually had it a little bit bigger, but what we found was when we started to, click on slices of a pie, for example, to expand it, that we were getting some of the labels were being cut off. So we had to reduce this a little bit in order to keep things all within the available space. Other questions? Remember, you can unmute and ask a question if you wish. Is there a way to make the, oh no, sorry, that was just asked. Anybody else with a question? We are recording this, so I will get it up and post it on our YouTube channel, so you can go back and replay it at some point if you wish. Again, I think you'll find real time is fairly straightforward if you have any familiarity with the software at all. So I would encourage you just to get hands-on with it and play around. I think you'll find it fairly intuitive. Can we print the output? No, we can't print real-time. Real-time is intended to be used interactively with the client. So let's just go back to the core principle that planning is about learning and decision-making. And if we look back in time, when I'll call it computer-assisted planning first came into existence, people were using spreadsheets, for instance. Then they would use a tax program, which have been around since the 80s. They'd use a tax program to calculate current taxes and maybe do some projection on future taxes. And then they'd have to assemble everything together. So the focal point of the planning process became the plan document, because we had to patch things together in a nice presentable way, put it in a nice binder, present it to people. And it was the learning medium out of necessity. But of course, in today's world, we can talk about all sorts of learning media. So yes, there's the printed report, but one of the reasons we introduced PowerPoint presentations was that gave us a different medium for presenting things to clients. I believe, and always have believed, that the most effective medium is one where we work interactively. So what you'll find is that if you work interactively, you have the conversation with people, they're participating, they're learning as you go through things, that there is a much lesser reliance then on printed material. And Paul actually talked about this last week when he said, you know, it's why bother printing a plan? They're stale from the moment that they're done. But I'll just go down to to-do reports and remind you that one of the things that we have available besides the standard report feature is if you go to report options, you can switch to the worksheet mode. And then what you can do is go down and print selected output. I'm going to use the net worth. You can produce selected output. This is current net worth as of the moment. You can see then, you know, no page numbers, no text, no headers, no footers, any of that sort of thing. So what you're able to do is you're able to write a covering letter that summarizes all the key learning. I would suggest putting together a to-do list. That's the, you know, the focal point of everything. But then you can attach these worksheets as appendices to that covering letter. So it keeps it, I think, very client-friendly, very easy for people, and you know, avoids the need to spend a great deal of time, you know, writing detailed reports. Clients learn interactively. All they need is a takeaway, primarily their to-do list, and then some worksheets that sort of summarize the key learning points. Other questions? Well, if anything comes up, you know, please perhaps send me an email or give me a call and we'll entertain the questions then. Otherwise, thank you for your time. Have a great weekend, and I will assemble this and post it on our YouTube channel. Thank you.